Hello, everybody. My name is Yaman, and I provide daily updates on Tesla, markets, and technology. Let's get started. Markets are pretty much flat today, open a little higher and drifting lower. Oil prices are at $60 handle. That's amazing. Oil prices dropped 1.5%, a dollar per barrel, to below $61. The yield curve is pretty much unchanged. 10-year Treasury yield as is at 4.10. We didn't get some of the government data we were going to get today because of the shutdown that we're going to talk about in a little bit. Nvidia is up 1%, Apple is up 1%, Tesla is down 2.5% after its deliveries numbers. Financials are down, healthcare is down, everything else is pretty much mixed. Let's read the daily article. S&P 500 and Nasdaq hit intraday record highs as rate cut hopes Trump shut down jitters. The S&P 500 and Nasdaq hit intraday record highs at market open on Thursday on the back of renewed expectations for interest rate cuts, while traders brace for a data-light end of the week with few fresh catalysts. Investors have anchored their expectations to a dovish Federal Reserve, which has allowed them to brush aside uncertainty surrounding the U.S. government shutdown. At the heart of the Fed's policy outlook is a labor market, a critical piece of its dual mandate. With the government shutdown creating a data vacuum, investors are relying more heavily on alternative sources. I think they will look at the fact that the trend in jobs market continues to be weak, said Art Hogan, chief market strategist at B. Riley Wealth. The tech sector, up 0.3%, was the biggest boost to the S&P 500. Nvidia rose 1%, while Broadcom and AMD were up 1 to 1.7% respectively. AMD rose after a report said Intel was in early talks to add a chipmaker as a foundry customer. The industrial sector rose 0.4% on the S&P 500. Caterpillar hit a record high and was last up 2.4%. Consumer discretionary stocks fell 0.2%. Tesla reversed early gains to fall 2% despite reporting third-quarter deliveries above analyst estimates. According to a report from global outplacement firm Challenger Gray and Christmas, U.S. employers announced fewer layoffs in September, but hiring plans so far this year were the lowest since 2009. It came a day after weaker than expected ADP National Employment Report on Wednesday. These reports are filling the gap left by the weekly jobless claims report, a key gauge of labor market health, which on Thursday became the first data casualty of the government shutdown. Traders have read the recent data as enough to push the Fed toward the 25 basis point rate cut. In stocks, credit bureaus Equifax and TransUnion fell 8 and 11% respectively after FICO launched a program that could allow mortgage lenders get access to credit scores without relying on the bureaus. Wow. FICO surged 30% to top the benchmark index. That's very interesting. Occidental Petroleum said it would sell its petrochemical division to Warren Buffett's Berkshire Hathaway for $9.7 billion. Shares of the oil and gas producer fell 4%. Okay. Let's switch to Tesla. Tesla reports blowout Q3 deliveries as buyers plow in before federal tax credit expires. I published a short video on YouTube before the deliveries results, and I said basically Q3 deliveries don't really matter because it's a pull forward from Q4, and then we'll see what happens in Q4. I expect somewhere around 400,000 deliveries for Q4, maybe even lower. I recommend subscribing on the YouTube channel because I'm going to be focusing more on the YouTube channel going forward. Tesla reported blowout third-quarter global deliveries as the expiration of the $7,500 federal tax credit in the U.S. likely juiced sales. Tesla said Q3 deliveries came in at 497,099, easily topping the consensus around 440,000. Tesla said Q3 total was a new quarterly record for the company. Tesla stock was up in pre-market trade, but rolled over and dipped into the red at the open. Tesla also said global production came in at 447,000. The company deployed a record 12.5 gigawatt hours of energy storage products. Tesla's huge Q3 similarly strong EV sales results from GM, Ford, and Rivian. Buyers likely pulled forward EV sales after the Republican-led U.S. government phased out the federal $7,500 EV tax credit. The big question for the industry is how far sales will fall in a post-tax credit sales environment. I think they're going to about halve actually. While the numbers were better than expected, we think it's important to highlight the data is backward looking, CFRA analyst wrote in a note on Thursday morning. Looking ahead, we think there are still major questions regarding the earnings impact of legislative changes on the tradable emissions credit market and EV demand in an unsubsidized US market, particularly in light of Tesla's lack of new vehicle models. Tesla CEO Elon Musk warned after Q2 earnings that Tesla was in for a few rough quarters as the company delayed the launch of its cheaper EVs until the federal EV tax credits expired in the US. Tesla's strong delivery numbers arrive against the backdrop of persistent issues in Europe, where new competition and Musk's right wing politics have likely alienated buyers. Per the European Automobile Manufacturers Association, Tesla EV registrations in Europe fell to just 14,831 units in August, a 22% drop compared to a year ago. Meanwhile, total EV registrations in the region, which includes the UK and the European Freight Trade Association, rose 27%, with overall registrations, regardless of powertrain, up 4.7%. Nevertheless, Tesla's stock has been on a tear lately, with shares up over 30% in September. Today's beat only adds to the gains for a company whose investors are betting on AI and robotics products like the Cybercab, the company's fledgling robotaxi service. What really matters is autonomy. I'm not going to read that bullshit. This is from Gene Monster. Okay. Rivian lowers annual deliveries forecast as tax credit expiry. Let's start that again. Rivian lowers annual deliveries forecast as tax credit expiry fans industry gloom. Rivian lowered the midpoint of its annual deliveries forecast range on Thursday as the EV maker braces for an uncertain few quarters due to the lapse of federal tax credits, sending its shares down more than 5% in the early trading. I think it's actually down more like 10% now. Despite reporting a nearly 32% jump in deliveries, Rivian and the EV industry face a cloudy outlook after the US Congress, through sweeping legislation, moved to abolish a $7,500 tax credit on leasing that EV makers had long relied on to bolster sales. It's not just leasing. Who wrote this fucking article? Reuters. It's also sales. Tax credit expired on Tuesday. Analysts and experts had predicted that EV sales and leasing would plummet after it ended, but that a rush on to purchase EVs from buyers looking to beat the deadline would precede to all. Also, it's not just used. It's not just new car sales; it's all used car sales. So none of these articles mention that fact. Rivian narrowed its annual forecast for deliveries to between 41,500 and 43,500 vehicles, the midpoint of which is 500 vehicles lower than its previous forecast between 40 to 46,000 cars. The company delivered that makes no sense. So if it was 46,000, so midpoint is 43,000, and now the midpoint is 42, 220, 250. Okay. The math is wrong. So let's skip this article. Okay, switching to macro. U.S. hiring plans sink to lowest since 2009 in September as labor market slowdown continues. So far this year, employers plan to add just 204,939 jobs, according to Challenger Gray and Christmas. Hiring plans among U.S. employers for the year through September were at their lowest since 2009, according to a new report underscoring the labor market's stagnant state. The weaker planned headcount was largely fueled by a steep drop in seasonal hiring announcements, the global outplacement firm Challenger Gray and Christmas said in a report on Thursday. So far this year, employers have planned to add 204,939 jobs, 939 jobs compared to 483,000 at this point last year. That's a big drop. That's more than half of the drop. This time last year to date, hiring was the sluggish when 2009. The last time year-to-date hiring was this sluggish was 2009, when companies recorded 169,385 new hires as the economy was clawing its way out of the Great Recession. Challenger also said it tracked 100,800 seasonal hiring plans last month, down from 401,850 announced at the beginning of October last year, the report said. Meanwhile, planned job cuts year-to-date at 946,000 were at their highest year-to-date total since 2020. though they plummeted 37% from August. It's very likely job cut plans are going to surpass a million for the first time since 2020. Andy Challenger, senior vice president and labor expert for the company, said in a statement. Previous periods with this many job cuts occurred either during recessions or, as was the case in 2005 and 6, during the first wave of automations that cost jobs in manufacturing and technology. This year's job cut announcements were driven by federal government layoffs, businesses' responses to economic uncertainty caused by tariffs and inflation, and store closings, among other factors. AI was less of a driver, though 17,375 cuts were explicitly attributed to AI, the report said. Because the government shutdown is likely to delay BLS's job report for September, originally scheduled for release on Friday, fresh workforce data from private firms like Challenger and payroll processor ADP is drawing increasing attention as market watchers search for signs of the labor market's health. Okay. Company-specific news. Berkshire Hathaway to pay nearly $10 billion for OxyChem, potentially Buffett's last big deal. Yikes, what a headline. They fucking killed the guy. Berkshire Hathaway is buying Occidental Petroleum's chemical division for $9.7 billion in what may be the last big acquisition involving the consummate dealmaker Warren Buffett. Warren Buffett wasn't mentioned anywhere in materials released by Berkshire Hathaway discussing the deal Thursday, potentially signaling a passing of the torch to the vice chair, Greg Abel, to whom Buffett will, oh my gosh, misspelling. Yikes. Who wrote this article? Josh Funk. Moving on. Trump targets deals in pharma, AI, energy, mining before midterm elections. Eli Lilly was asked to produce more insulin, Pfizer to produce more of its top-selling cancer drug Ibrance and its cholesterol drug Lipitor, and London-based AstraZeneca to consider new headquarters in the U.S., according to two sources. Pharmaceutical executives are getting near daily calls from staff at the White House, including Chief of Staff Susie Wiles and senior figures at agencies like Health and Human Services and Commerce Department, two sources familiar with the matter said. But pharma companies are the tip of the iceberg. The Trump administration is pursuing deals across up to 30 industries involving dozens of companies deemed to critical to national and economic security, according to more than half a dozen people familiar with the talks. In some cases, the administration is offering tariff relief in exchanges for concessions, revenue guarantees, or taking equity stakes in troubled companies, among other types of help. The fast-paced deal-making is designed to deliver political wins for U.S. Donald Trump before the 2026 midterm elections, the sources said. On Tuesday, Trump announced a deal with Pfizer's CEO to cut drug prices in exchange for relief from planned tariffs on imported pharmaceuticals. The United States is done subsidizing healthcare of the rest of the world, Trump said in an event in the Oval Office. Just as important as the deals themselves is the optics. They must be announced from the White House, two sources said. Eli Lilly learned this the hard way when it excluded Trump from its announcement of two manufacturing sites in September and got a call from the administration asking why they didn't allow the president to announce it himself. A spokesperson for Eli Lilly said they were unaware of the interaction with the administration and said, as an American company, Lilly is committed to expanding manufacturing capacity in the U.S. Pfizer and AstraZeneca declined to comment. The White House declined to comment on Eli Lilly's announcement or the specific details of the administration's plans. It's all a part of White House spokesman Kosh Desai has described as a whole-of-government approach to deal-making to safeguard our national economic security. The plan is to use the broad powers of government to push companies to further Trump's goal of moving manufacturing to the U.S., reducing dependence on China, strengthening supply chains for critical products, and contributing to the government's coffers, according to 6 people familiar with the discussions. Pepsi's chips empire is losing its shine. Pepsi's crown jewel isn't as bright as it used to be. RBC Capital analyst Nick Modi recently wrote in a note to clients that the company's biggest challenge is its Frito-Lay snacks division, not bottling or cost cuts. Frito-Lay has 3 main issues. 1, price points. 2, under-index to growing parts of the snacking wheel. And 3, lack of exposure to protein, Modi wrote. Fixing these issues will take time, capital, and reinvestment that could dilute EPS and or returns. Year to date, Pepsi has slipped nearly 6% compared to S&P 500's 14% jump. Interesting. Moody's cautious view comes as Pepsi fans of activist pressure. In early September, Elliott Investment Management disclosed a $4 billion stake in the company, pushing for brand innovation and efficiency. Those changes could boost Pepsi's share price by 50%, activist investor group said. Okay, and our final piece of news. OpenAI valuation reaches $500 billion, topping Musk's SpaceX. OpenAI has completed a deal to help employees sell shares in the company at a $500 billion valuation, propelling the ChatGPT owner past Elon Musk's SpaceX to become the world's largest startup. Interesting phrasing. Current and former OpenAI employees sold about $6.6 billion of stock to investors, including Thrive Capital, SoftBank, Dragoneer Investment Group, Abu Dhabi's MGX, and T. Rowe Price. A person familiar with the transaction said. That boosted the U.S. company's price tag well past its previous $300 billion level during a SoftBank leg finance round earlier this year. The rapid rise underscores the investment frenzy surrounding the leaders of a technology with the potential to transform industries and economies. All right. I'm going to create some videos and YouTube shorts on these news. To see that, go onto my YouTube channel. It's the same alias, Valley Analyst 1. Okay, youtube.com/Valley Analyst 1. And you can reach my channel there, and I'll see you there. Take care, everybody.